G'day, Jono here with our July investment market summary. So we're at that time of the month again for a bit of an update. And I've warned the last couple of months that things were going to get a lot busier and more tricky, I guess, for markets in the second half of the year. And I guess that time is near. We've got corporate reporting season upon us now, which started last week with the banking sector. Really interestingly, tale of two cities or two different markets, in the sense that the investment banks had record quarters supported by central bank liquidity and huge amount of equity and debt issuance supporting trading and investment banking revenues. The flip side being that a huge number of loans in the commercial banking and consumer banking businesses remain in forbearance and pressured by low interest rates, and very hard to understand how that book of loans will look in 6 months' time as stimulus measures unwind. The big focus on the reporting side, just to get it out of the way, will be technology companies which fall at the end of July, a couple of weeks from now. Apple, Google, Amazon, Facebook all report within 24 hours of one another. And given the huge outperformance from that part of the market, will be crucial in deciding where things go. But also too, right now we've got imminent news from the Australian government, imminent news from the US government on their plans for potentially extending the recent stimulus measures made in the wake of the pandemic. As I speak today, it looks like JobKeeper will be extended, but in a diluted fashion towards the end of the year. And similarly too, it does look like some of the measures in the United States will be extended, but again, the size of the package will be diluted on the initial over $3 trillion in the US, down to somewhere between $1 and $2 trillion, depending upon how that plays out in the coming couple of weeks. So reporting season is a big feature. Stimulus is a big feature, but also to just the uncontrolled spread of the virus in the United States. I think at some point very soon is going to become an issue. We've got a record number of cases, mortality rates slowly starting to creep up. A lot of people are focused on the improving mortality rate as a good thing, but I just think it's a bit of a time lag. And unfortunately, the last week has seen the death rates starting to increase. We've seen mask mandates introduced in the United States, as they have here in Melbourne, which I think is a really good thing in terms of stopping the spread. Many cities, so Houston comes to mind, many states, California comes to mind, rolling back on reopening plans, and that's going to have a big impact, unfortunately, on consumer confidence and general business activity. And that leads me to a bit of an update on the economy, where things are at. I've said before that we're in a little bit of a twilight or a dreamlike state at the moment, because there's huge numbers of unemployment around the world, and yet consumption's held up okay, and in some areas actually surprised because of the stimulus checks that have been written. So where we stand now, at the worst, on the real-time, high frequency economic data in the United States, at the worst, the economy was running down about 12% annualized. And that was obviously early April or thereabouts. As it stands now, the US economy on those same measures is running down just under 7%. So that gives you some context. We're still down 7%. But importantly, in the last couple of weeks, things have started to roll. Small business revenue numbers on a couple of measures we track are running down 20% or thereabouts. There's still over 32 million Americans that are seeking some form of unemployment insurance, which is over 20% of the workforce. Here in Australia, the combined underemployed and unemployment rate is just short of 20% as well. So the economy has really quite substantial issues until such time as we get a vaccine, and that leads me to that point. And I'm quite optimistic on us getting a vaccine that will maybe not be a cure-all, but certainly will be effective in preventing death and preventing more serious illness that comes with those that unfortunately are hospitalized. And the earliest we will get news on human trials that will allow for potential approval by regulators will be mid to late September. And that relates to the Oxford vaccine run by a company called Vaccitech. They are the leading vaccine developer at this point in time in terms of where they are in the process. The next following one, which again everyone's quite excited by, is Moderna, and they start human trials at the end of July. And the FDA, the US regulator, have said we need at least 6 months. So that leaves them being able to be approved probably mid to late January. So that gives you some sort of a timeline. So I would say at best, probably looking deep in, midway through Q4, assuming Oxford have some success. Otherwise, Q1 with Moderna and a few of the other vaccines coming through. So we've still got some time to play out. So with all of that said, markets obviously remain pretty good, but we're certainly very cautious and nothing's changed. I feel a little bit sick, talking about the same thing over and again, but the reality is we still see more grounds for caution. And that the economy's got a hell of a lot of work to go. The one new thing that I think you'll see us talk about a lot more in the coming couple of months is potential policy under a change in presidency. And at this point in time, and I'm not using the polls, but using the betting markets, and Joe Biden is streets ahead of the current president, Trump. And that means that we need to start thinking a little bit more about what sort of presidency it could be under Joe Biden. And I think it will be very stimulatory, but the money will be spent in the lower socioeconomic groups. And that is more supportive for economic demand than it is perhaps for asset markets, which is what we've come to expect with the multiple rounds of QE in the recent decade. And that means that there's a potential for an uptick in inflation at some point late in 2021 and into 2022 if people start spending that money. And again, lower socioeconomic groups do tend to spend money that they're given as opposed to save it. So that's a good thing from an inflationary standpoint. The other really good thing, I think, from the perspective of the planet is that under a Biden presidency, you would see the United States do a very, very speedy catch up to the rest of the world on issues related to climate change. So green energy and fuel efficient vehicles and the like. And I think that would be very stimulatory to certain parts of the economy. And there's a very strong likelihood that we will try to increase our exposures to those themes in the coming couple of months as we lead up to the US election on the 3rd of November. I hope that's useful. I hope everybody's staying safe and surviving as best as they can through the current tricky times. And, I'll be back again next month. Thanks.